Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at indices today after there was quite a downturn on the Dow, especially dropping over 400 points in yesterday's trading. The S&P and Nasdaq did follow suit after what is traders and economists thought that the banking crisis is not yet over, and this is ahead of tonight's Federal Reserve interest rate decision, which is expected to be raised once again by 25 basis points. The last time around, a lot of economists were thinking it was going to be a muted FOMC, but 25 basis point hike rate is expected. Well, what is known as the inflation not really dropping as much as we had wanted it to, especially for the Fed's 2% target. But let's just go through a few of the banks that actually tumbled quite significantly in America. We've got PacWest Bancorp tumbled over 26%. West Alliance Bank fell just over 20% as well. And the big banks were not spared. Wells Fargo, Citigroup, and Bank of America all slid roughly about 4% yesterday. So it did take a toll on the indices and where the next growth is for the American banks and also the crisis that was expected to be over last month, but it still seems to be lingering quite significantly. And in doing so, the US indices have also seen a bit of a decline. So are we going to get more of a decline when the Fed does give the interest rate decision? We've got services PMI data as well, which is supposed to be slightly higher than the consensus, but will this be enough to save what is a little bit of a dark day for the indices and the banking sector as well? Let's get straight on to the Dow. Got it on the 1 hour chart at the moment. So I just wanted to show the accentuation, well, the decentuation, sorry, on the Dow, but we are just creeping back up as we get to this particular point here. As I said, halfway through means it could hit a bit of resistance now before possibly going on to get this full V-shaped recovery like we usually see when a lot of not only indices but even forex pairs, commodities do take a bit of a slide in recent sessions. So with that being said, are we going to see any more of a slide to the downside? Well, we're seeing now possibly a slight bit bullish divergence which has come into play here, and we've seen this particular pattern start emerging here, bit of a symmetrical triangle starting to take place. However, are we going to see a full reversal on the moves yesterday? We'll have to wait and see about that. Let's just put it back to a 4 hour chart though, because most interestingly enough at the moment, we're just seeing what is quite apparent now, because if we see from a longer term perspective, we were seeing a full recovery before this slide to the downside. So with that being said, even though we're expecting a slight recovery up to the last dip that we saw yesterday, could we see a total collapse back down to get this bearish V-shaped recovery as well? We'll have to wait and see. Obviously, we had quite a big false break here on the 4 hour chart to the downside, roughly to about the mid 33,000 level. So it's looking likely that we could go a little bit lower before we see a more slight recovery. But when we do get a recovery, roughly about this point here, are we going to see a more of a slide downwards and possibly this kind of big rejection that we've been seeing in the markets quite recently? Well, it's all about the Fed tonight, but let's just move on to the S&P. Start on the 4 hour chart, because it is looking again likely that we will possibly get a slight recovery from yesterday's dip. But if we look on the 4 hour chart on the biggest picture, like the Dow, are we going to see this V-shaped recovery to the downside here and then hit some firm support roughly just above the 4,000 area? This could be another scenario because, as I said, with the Fed, anything is possible, but it's also their policy after the Federal Reserve interest rate decision has been announced. So just keep an eye out for that, because it takes roughly about 1 hour for the markets to calm down. And even then, they could be quite volatile after that. So let's just go back onto the 1 hour chart. We're just seeing now a little bit more of a better picture of what's happened yesterday. So as I said, big downturn, slight recovery at the moment, but a bit like the Dow on the 1 hour chart, are we going to see heavy resistance now that we've kind of seen a halfway recovery and then move lower? Because as I said, on the bigger picture, this is looking likely that it could actually fall even further and complete this V-shaped decline in the near term as well. So, as I said, ISM services PMI coming up today, as well as the FOMC. So keep an eye on the fundamentals. Very big news events today that could really shape the markets, and then follow on to the rest of the week. And then, of course, the NFP to finish off the the week's trading. So we'll report on the NFP estimates tomorrow. And then obviously we've got the live webinar on Friday where you can join me, but I'll remind you as well what's coming up for the rest of the week. So stay with us, stay ahead and trade responsibly, and have a great trading day ahead, and bye for now.